Tēnā koutou katoa, ata māria. Welcome to today's fourth session of our Navigating the New Normal for Payments, the Hub series. I am Jane Retimana from Payments New Zealand, and I am taking you through this morning's session. Thanks so much for being with us. Those of you that have been with us over the last, this is the fourth week, and then next week's our fifth week, thanks so much for your support. Today we've got an interesting topic, the future importance of interoperability for economic recovery. And we've got two speakers today, Geoff from Te Pūtea Mātua and Julie from Swift, and they're both taking questions. So make sure you go onto the platform and put your questions in there after they've finished their presentations, and we will work our way through those. There is plenty of time for that today. I'd like to thank our sponsors for the Hub series, the great people from Swift, and I'm sure Julie will do a good job today of making the I in the Swift acronym interoperability. We also have the great people from ACI Worldwide, thank you so much, the Legal Eagles from Buddle Finlay who have supported us, and the techies from the Middleware Group. Thanks so much to our sponsors. We couldn't put on these events without you. So as I said today, we've got a pretty straightforward agenda for the morning. Geoff Bascand from the Reserve Bank first, and there's some questions with him, and then Julie Bolan from Swift. And then I'm going to share, just for around 5 minutes, some of the work we've been doing at Payments New Zealand on the future of payment systems and our payments modernisation plan. So without any kind of further ado, I'd like to welcome Geoff Bascand to our session today. Geoff is the Deputy Governor and General Manager of Financial Stability at the Reserve Bank of New Zealand. Geoff leads the Financial Stability Department at the bank and is responsible for forming and implementing policies to promote sound and efficient financial system. Geoff's role includes overseeing the major functions of policy and analysis, supervision and data and statistics. And Geoff has a background in that as formerly the government statistician and chief exec of Statistics New Zealand. So welcome, tēnā koe, Geoff, welcome to our The Hub series today. Thank you for being with us. And I will hand it over to you to share your thoughts on stepping up and moving forward. Thank you.
Well, tēnā koutou katoa. Thanks very much, Jane, for the invitation and the opportunity to speak with you all. Thanks to Payments New Zealand. I mean, this has been a pretty extraordinary year, as we all know. And so in the midst of one of the many engagements we were having with the sector, Steve Wiggins suggested that in the absence of a conference, maybe I'd be happy to talk in your Hub series, and I was very, very glad to pick up that opportunity and talk with the payments fraternity. I hope it becomes mostly conversation. I obviously do have some remarks I want to make from the beginning, and these are really to set the scene about how we think we're increasing our leadership role, if you like, in the payments and financial market and infrastructure arena. Let me just make sure I can get the next slides on here. So I was looking back at an address that Grant Spencer made to the payments conference that he was my predecessor as the Deputy Governor, as many of you will know, in 2014, and today does feel a bit like a progress report on many of the themes that were and initiatives that Grant touched on then. For example, Grant foreshadowed at that time a strengthening of our regulatory approach for systemic financial market infrastructures, and I'm going to comment on the legislation that we hope is soon to be passed in that area. We also talked at that time about some of our operational roles and cyber resilience, and these, of course, continue to be major themes. The Reserve Bank has multiple roles in the payments system as an operator and as a regulator, and of course as a user, as a bank that we are. we regulate the system and we keep an open eye on future players and innovations. And so I'll touch on these in the fintech and open banking and central bank digital currency arenas. But most of my focus, I suppose, is on that regulatory oversight role. I think it's always worth remembering, why this is an increasing area of focus for us. Big picture, my take, I guess, is that FMI legislation and our fintech response hinge off this global technological trend towards digitisation of financial services. A more globally connected world, emerging new digital technologies, the importance of data that's often embedded or very much associated with these technologies, and the ability to process it, means that financial services are conducted increasingly through digital channels. I mean, FMIs play an essential role in this context by improving the efficiency of the financial system, the management of risks within it. New Zealand is very much just part of an international trend in this area. And you see this with a sort of growth in the value of, card payments is just one indicator, but you could think of many others, increasing numbers of securities traded at the wholesale level and others. But this context makes the payment systems and financial market infrastructures increasingly important. They're central, if you like, to the way we think about the financial systems and its interconnections. And I suppose that, and more than anything, underpins why we are renewing and increasing our focus on FMIs and fintechs. Of course, resilience is therefore crucial, and that's got to occur both at the infrastructure level and at the retail banking system level. My talk today is mostly at the infrastructure level. I'm not going to say too much about banks' own systems, other than to remark that we've seen some signs of underinvestment in some areas, poses some risks, and there have been some instances and indicators really of some vulnerability in bank systems there, that with some payment systems and incidents that I would say is a very strong reminder to banks to keep investing, keep up with the increasing demands on these systems. You can't be complacent or tardy. You've got to keep them up to date. I note in this context that next week we'll be issuing a consultation paper presenting our initial views on the role of information gathering and sharing and building cyber resilience, and how we can potentially monitor and keep track of the resilience and the sustainability of the system. Let me start in the substance with talking through the new Financial Market Infrastructures Bill legislation that's before the House. The bill, which has just been reported back from the Select Committee to the House, is sitting there obviously in abeyance at the moment through the election period. It covers all existing financial market infrastructures, payment systems, settlement systems, central counterparties, depositories, etc. Retains the flexibility in this bill to deal with new developments, fintech we might think of in different forms. And it does this by having a focus on the substance of activity rather than the form of the activity. So what is actually being undertaken in the financial markets to provide, if you like, services from one party to another. The bill proposes that it will ultimately be administered and regulated by both financial market infrastructures, be regulated by both the Reserve Bank and the Financial Markets Authority. The only exception to that, if you like, is that the Reserve Bank will be the sole regulator for pure payment systems. The bill provides a separate approach for designated and non-designated FMIs, which ensures a risk-based approach and tries to manage down, if you like, the compliance costs for entities. So designated FMIs are either those that are identified as systemically important, crucial to the whole system's operation, or those that choose to opt in to access the legal protections around settlement, finality, netting, and the enforceability of rules. So there still is an opt-in, but there's also a provision for us to compulsorily determine those that we regard as systemically important. The significance of this is that designated FMIs are subject to particular requirements, compulsory information gathering and investigative powers, oversight of rules, legally binding standards, and crisis management powers should something go wrong. Whereas the non-designated FMIs are really only subject to information and gathering powers and independent report. Just on the status, as I say, it was reported back from the Select Committee on the 4th of August. What happens from here depends a little bit on the determination from the House. Where we can't be sure exactly where they'll put it in the legislative program, but they've been committed to it should the government be re-elected, and hopefully we'll see a quick passage. Once it's passed, we anticipate it'll take about 18 months for a transitional period before it becomes fully operational, and this is to allow standards to be written, consultation on the framework for determining who is actually systemically important. While we've done some consultation on that previously, this will be a formal phase following the legislation. And the standards will be based upon international principles for financial market infrastructures. So there's still quite a lot of work to go to make it fully operational, but the legislative approach provides a real basis for our increasing supervision and oversight of the sector and our leadership of the sector. So I suppose we're moving on in anticipation of it already, and very much wanting to work in a way where we provide effective regulatory leadership to the sector. In broad terms, our supervisory approach to FMIs will be similar to that we have for other financial institutions. We apply a risk-based approach. We want to focus on those that are most material for the system. Slightly lighter touch to those more at the margin, if I put it that way. Our approach will also be principle-based, following the PFMIs, and with a focus on governance, risk management, continuity of service, fair and open access, good conduct, and transparency. And of course, those principles also put onus and responsibilities on us to operate in good, consistent, and transparent manner. And we'll aim to do that. We'll be open with our regulatory approach, and we'll put more and more information out about that. So I suppose my message here is we're investing in increasing our oversight and monitoring of the sector. We are stepping up our resourcing. We are trying to get a bit ahead of the game, and information and requests and monitoring is part of the discussion that's going on. We're already engaging in discussion about how we should monitor the performance of the sector, how we would be able to report on that so that it'll be useful for different parties. I want to touch on something which might be a little less familiar to you, but as part of this, in a sense, growing proactive leadership role that we have. Our international engagement, of course, is a very international business, payments and financial market infrastructures, as you all know. Lots of dimensions to it, cross-border ones being important. But in broad terms, it's also an international regulatory orientation. While most of that regulatory orientation is led through the Bank of International Settlements Committee for Payments and Market Infrastructures, and by IOSCO, of course, the Securities organisation. There are regional groupings that also pay quite a lot of leadership in the area. EMEAP is a East Asian central banking body community that we're an active member in. Active member in it for monetary policy purposes as well as financial regulatory purposes. It includes members from Australia, Singapore, Hong Kong, China, Japan, South Korea, Thailand, Malaysia, Philippines, and of course New Zealand. The main purpose is strengthening the cooperative relationships between central banks and supervisory authorities, and one that we find a very valuable and active community. I should have flicked to that chart. You'd have seen the flags and the country membership earlier. I suppose the interesting development here is EMEAP has a number of working groups, and one of those is a working group on payments and market infrastructures. The Reserve Bank's just taken over or assumed chairmanship of that working group, which we'll have for at least 2 years. It's one of the three main working groups operated under the EMEAP umbrella, along with supervision and financial markets. And this role, this work, we think aligns very, very strongly with what we've just been talking about in the FMO bill and our broader regulatory oversight and leadership role for financial market infrastructures. So we look to get quite a lot more out of this working group and utilise it to keep up with international developments, to build our understanding and also contribute to cooperation and learning across the East Asian region. Likely areas of focus for the working group, and we're just in the process of defining the working agenda for the next couple of years, but they do include sort of some landscape surveys and research projects that can inform particular topics of interest to that community. The changing patterns in the use of payment mechanisms, how to reduce the costs of cross-border transactions, the increasing regulation of what is a global business and not just a local business. All of these are topics that will be discussed and worked through in the EMEAP group. So I thought that might be of interest to you, just to show that we're well connected, and that group does engage with the industry as well. In fact, it's got a discussion with SWIFT coming up and not too far away. So quite good having Jane on Julie on the line, and I'm sure she's aware of that. I suppose the next part I just wanted to touch on was the opportunities in our approach to fintech. I mean, fintech, as you're aware, is of course a term that describes a huge range of activities, the common features being they relate to finance and are technological. Some of them are relevant for us as a regulator, some of them are relevant for obviously clients, consumers, and some of them are in the background in support of a whole lot of other services. But it is part of the dramatic innovation going on in this industry, and we are trying to engage in a structured way to understand it and its implications more closely. So this little diagram here, just to focus, identifies three key strands to our approach. One's an industry engagement strand, and that's done, and I'll talk a little bit more, in conjunction with our COFA partners. The second is really on our own operations, how we can utilise it and draw on it more effectively. And the third is obviously in relation to where are digital payments and digital money potentially going. There we've been reorganising ourselves to strengthen our capabilities, and we've established a new money and cash department with additional analytical and policy resources to provide broader consideration and around the future of money. So some very capable people there who are investing really quite long term in our thinking and approach there. Fair to say that we, and I'll touch on this, still haven't developed a very specific determination of how we will proceed, but this is a complex subject, and we're working actively to try and work out what the pathways look like. So I think I'm going a slide behind what I'm talking about, and I apologise for that. This was the slide of our three approaches. Let me move to this. So one of the things we're really conscious of is that there are a number of different dimensions to fintech. Some of them touch on conduct issues, some of them touch on financial stability issues. Multiple regulators have an interest in it. We're working very closely with FMA and the Commerce Commission on this area. There's a joint working group between the different regulatory agencies, and in fact we've got a discussion about it this afternoon at the Council of Financial Regulators. So I'm very conscious that we want to make this an efficient approach for the industry, so that they know how to engage with us, who to talk to, and provide, in one sense, one channel in that we can then work out who's best to address the response, whether it's an investment product, something that needs to be treated in a fair dealing context, whether it's something that we need to deal with because it's effectively a quasi deposit taking, or maybe formally a deposit taking entity, and something that we need to do from a regular financial stability perspective. So this is an area of close cooperation. We've got a very open and a strong appetite to engage and dialogue about it. I would say that our regulatory approach overall is that just because things are provided in a somewhat different technological way, we don't think that means they necessarily lead to a different regulatory set of rules. The rules need to accommodate that regulatory approach, that technological approach. But in broad terms, our rules are supposed to be defined by risk and the underlying activity. And so our standards are sort of going to be common, depending upon, common across different forms of business, if you like. So that's our starting principle, is any deposit-taking institution, if I use that category, or any financial market infrastructure, would be treated in the same sort of manner, whatever their business model is. So we're not trying to hinder innovation, we're trying to support that, but trying to provide clarity over that regulatory approach, and we'll try and be more open about that in detail as time goes on. I suppose another example of that's open banking. Just here, we're clearly a topic that's been under discussion for a while. We remain, positive about the opportunities that open banking presents. We also have to manage and be alert to the risks that it potentially presents. There are risks from data being transferred, services being provided by entities that are less familiar with the regulatory requirements. Money laundering still needs to be achieved from the financial institution's point of view. Liquidity still has to be managed if deposits are moving, across institutions, and credit's not, then you potentially get a mismatch going on. So, we just got to make sure that we facilitate these developments that can provide real customer benefit, but manage the risks at the same time. In this context, we are supportive of MBIE's work on establishing a consumer data right. We think it's a helpful initiative to realise the opportunities. This area is still relatively slow moving. We really appreciate Payments New Zealand's support and work on the standards that are there. But we do need to see, we want to see some of this innovation come into play for consumers to benefit from it. So I'm going to stop there. I suppose what I just wanted to emphasise is, this is a fast-moving landscape, and more than anything, our engagement with the sector is important. I hope that you have taken from me a message of openness and a desire to be thinking very actively about how we can help enable and support a dynamic financial sector. So thank you.
Kia ora, Geoff. Thank you. We've got a few questions here, and hopefully we'll get some more through. Just how will the implementation of the FMI bill change the bank's supervision of FMIs?
Well, I suppose the shortest part of the answer to that question, Jane, is that I think it's making us much more focused on it, more purposeful. We are resourcing, increasing our capacity, so we're going to put some more people in there with the skills to understand the sector and work closely with it. And obviously over time understand the differences in risk and the different nature of the entities within it even more closely. So yeah, it's a growing area for us just to provide a bit more attention and focus on, I think, would be the shortest description of that. We will, in line with our overall regulatory approach, just try and be a bit more explicit, if you like, lay out our frameworks and approaches over the next year. It's a real commitment we have to be open about that.
Okay, and you mentioned a couple of questions here about fintechs. The emerging fintech trends, you mentioned open banking. Are there any other trends that you're observing, and how would some of those trends in fintech maybe change or impact your supervisory stance?
Yeah, well, I mean, it is a fascinatingly diverse sector. So obviously, we just recently had the launch of a stable coin, I suppose, so to speak, by a company in New Zealand. So that notion of sort of digital payments continues to be experimented or innovated in different ways, and how that sits alongside more familiar payments mechanisms is one thing we're watching, and trying to work out how far that would reach, what it does in terms of access for households, continuing decline in the use of cash. I mean, COVID's seen another step up in the use of online banking in different ways. We've had, I think, in our own supervisory area, technologies and mechanisms for big data analysis are increasing quite significantly. It's another trend. AML, searching use of transaction record data, various other supervisory technologies are there. So yeah, it's a challenge to keep up with it all, but that's a really important task for us to do so, and to be alert to how both risks and opportunities evolve.
Yeah, and as the bank, we've seen this year, in fact, a couple of roles come up in the bank that have that future view. I think you have got a new head of money, and I saw a comment that someone said they were the cash czar, which was a grand title. But is that, and I know in that portfolio of that role is looking at digital currencies. What's the bank thinking about in terms of those digital currencies? Or whether
we're trying to keep very connected with the forefront of thinking around the world on it, and so I suppose that's the very start of it is to make sure we can learn from others who are investing even much more than we can, but exploring the potential for this in Sweden and the UK and China and so forth. So we've got to make sure we absorb that and try and interpret it and understand it for the New Zealand context very well. Australian payment system, obviously is very important, close connector for us too. So there are lots of dimensions to the digital currency. There's obviously the technological ones, but there's also the what's its implication for the banking system? Would we be in any way disintermediating it? Would we be, changing how it's sort of the engagement with customers and providing a different form of asset for them? What's the real benefit and use of that? So I think we're exploring these questions very, in a more concerted way, and we do have some very capable people now working on this who hopefully will be issuing some more sort of think pieces and determining a pathway over the next few years. It's we very much see it as sitting alongside cash in the foreseeable future rather than a replacement. Cash has still got a place in the system. We don't see that disappearing, but we do see additional channels potentially opening up.
Thank you. And a question here, actually just moved around, with one of the, and I'm not sure whether you will be able to answer this, but if the government is looking to regulate interchange fees, would the RBNZ be involved in that process like the RBA is in Australia?
Well, we're not directly a fee regulator. That's not per se our legislated mandate, but we are interested in the efficiency of the financial system. We do have a role in supporting that. And so I guess it's an area we work with the MB and the Commerce Commission in particular on, and asking, are there signs of inefficiency? Fees are stubbornly high, then there seems to be, you're asking why, what's going on? Is there's a competitive problem? Is there something that either in regulatory settings or in the market dynamics that are holding them up? So we have an indirect, a contributory involvement, but not a per se responsibility to set regulation in that area. But market studies, if you like, or understanding of what the problem, what the reasons are, is something that is close to our heart. We want to see a dynamic, an efficient financial sector. That's what provide, is the heart of providing good services to households out there.
Yeah, absolutely. And another question here, which probably could be our final question, Geoff, is what kind of investment in infrastructure would you like to see from banks to make sure they can keep up with the increasing demand on payment systems? And will you do anything to ensure this investment happens?
Operational capability of banks is an increasing focus of our discussions with them in our prudential supervisory engagements. Banks have got to be enabled so they can interface with a changing, payments and financial landscape, if you like. So the challenge, of course, is you want enormous reliability of your back office systems and banks, and you need really dynamic front, customer serving systems, and you've got to make those talk to each other. So I guess our engagement with banks is, are they investing actively in this arena and getting the best of capabilities architecturally and have really strong plans, upgrades and reviews on a regular basis to this, or are they sitting, seeing it, sort of hoping it's stable for 10 years and dealing to it in a crisis? That would be negligent. So, our discussions are, how active are your plans? What's your IT oversight? Is this being done overviewed at board level? Are you really looking to have a visionary focus about this? Because this landscape, it may not change dramatically next year, but somewhere over the next 10 years, it's going to be very different, and you've got to start preparing and readiness for it and openness. So, it's a challenge and an ongoing dialogue to make sure that this is done. done well and in hand with cyber security, in hand with privacy protection, data care, if you like, for the customers. All of those need investment and effort to be done, and I'd say that it's a slightly mixed picture. We think some of it's been a little bit slow, and it needs to accelerate a little bit if I put a bit of an edge into that discussion.
Thank you. And I was going to ask you finally any kind of final thoughts and advice for the industry and the payment system, but I think you might have just wrapped that up with your answer to that question. Have you got any final thoughts to leave with the industry?
At the risk of repetition, I'd say, look, we want to keep talking with you. We really appreciate this opportunity from Payments New Zealand. So the dialogue's really important. But yes, this is an active, really dynamic sector, and so big and longer term players need to work out how to engage in a world where payments and financial market transactions and activities and things are all going to change in the way that they're conducted. And but at the heart of it, you're trying to provide financial services to people. So these are mechanisms to support people we really value and want well-managed innovation, I suppose, is what we'd like to see.
Kia ora, Geoff. Thank you so much for being here with us today. That was really interesting, and I think you clearly kind of set out your thoughts and expectations for the industry and those of us working in payment systems and what we need to be looking forward and really making sure we maintain a progressive system. So thank you so much. Have a lovely day, and no doubt we'll see you again soon. Ka kite. Thank you, everyone. Now, our second speaker, Julie, is having a few internet issues beaming in with us from Australia. So I'm just going to jump in here a little bit earlier and just share with you some of the work we've been doing. Actually, I'm not jumping in because I think I can see Julie there now. Julie Bolan from the Head of Payments Markets from Swift. Hi, Julie. Are you with us now? Good morning. So, hi, nice to see you. I'm glad you fixed your internet issues and yes, you're with us this morning.
Yes, apologies. Apologies in advance for any technology issues that I might have. Just letting you know my internet connection is a bit shaky this morning.
Yeah, well, that's the thing with technology, isn't it? Sometimes it just doesn't work for us. So I'd like to introduce everyone to Julie. Thanks for being with us, and thank you once again to Swift, who are, as I've mentioned, huge supporters of our payment system here in New Zealand and provide critical infrastructure. Julie heads up the payments business development and strategic initiatives for the Oceania region. She heads up the GPS services, has worked on payment system transformations like MPP, the new payments platform. She's involved in their ISO 20022, however we say ISO 20022, work and its risk and compliance offerings. So she's had 25 odd years in banking and financial industry, so a lot of background in the payment space. And she's going to share with us some thoughts that Swift have on interoperability, the future of payments. So thank you for being with us, and I hope your internet holds out on us this morning. And over to you, Julie.
Great. Thank you so much, Jane. Can I just check you can see my presentation and everything is fine?
Will be up shortly, hopefully.
Okay, great. Okay, so would you like me to kick off then?
Yes, absolutely. If you kick off, it will hopefully get your prezzo up in the background.
Great. Okay, thank you. All right, good morning, everyone. It's really a pleasure to be participating in the Payments New Zealand The Hub Online series and speaking about the future importance of interoperability for economic recovery in this particular session. Look, just a little bit about Swift. Most of you, I'm sure, know that SWIFT is a neutral global cooperative, and it's defined by its community of users around the world. At SWIFT, we really believe that we can achieve more together by drawing from the resources of everyone from our global community. Most of you also would know at this time of year, SWIFT brings together the financial community to work collaboratively, to shape market practices, to define standards, and to debate issues of mutual interest at SIBOS. This year, SIBOS embraced the digital online approach, and for the first time in its history since it began in 1978, 5 years after SWIFT founded, the digital approach was used, considering this year of 2020. So one of the things that I was thinking about when I was thinking about navigating the new normal, I thought it would be a great place to start with one of my SIBOS staples, and that's the McKinsey's Global Payments Report. So some of the fascinating headlines from the report that I picked out were McKinsey's characterised the year in two halves, or two realities. The first saw a major decline in revenues from decline.
Oops, I think we're having some problems with Julie there this morning. Let's just hold the line and see if we can get her back. Internet's not so flash. I'm not sure where you're all beaming in from this morning, but the weather here in Tamaki Makaurau, Auckland, is abysmal. So I'm not sure what the weather's like over in Sydney, if that's having issues. Looks like we might have lost Julie. While we try and get her back, I am going to just jump in here and share some of the work that we've been doing. Oh, no, she's back. Hi, Julie.
Hey.
Some technical issues this morning.
Okay. Sorry. Am I back?
You are back. And just if you can share your presentation screen, that might work this time. And we'll give it another shot. You were talking about McKinsey's report when you froze.
Yes, one moment, please, and I will share the screen. Okay, that's not working for me. Here we go. Share. Okay, I'm sharing my screen.
Oh, you sure are.
Okay.
All sorts of things on your screen this morning, Julie.
Okay. One moment. Okay. Are we back?
Yes, I think we're just the techies are just about to share that on the screen, I think. Yes, okay. There we go.
Fantastic. Apologies again. Hopefully we can get through this without any further technical challenges. But I was speaking about the McKinsey's Global Payments Report, and I just wanted to share a couple of headlines, but I'll move to the last one, which I think was the most interesting headline, and that was that companies specialising in payments have accelerated in their recovery compared to banks. And of course, this report also has some good deep dives on changes to merchant acquiring, supply chain changes, and the urgency for banks to reinvent their operating models for payments. I definitely recommend it, and it's worth a detailed read. So the other thing that's happening in 2020 is that the G20 has made enhancing cross-border payments a priority. The Bank for International Settlements Committee on Payments and Market Infrastructure, that's a mouthful, but the CPMI for short, has been tasked with developing a transnational approach to address the underlying friction points in the cross-border payments and infrastructure and regulations. The 7 key friction points that they identified is that they found banks around the world had an over-reliance on legacy technology platforms. They had fragmented and truncated data formats, which limits straight-through processing. There's a weak kind of overall position in the market, which creates barriers for new market entrants. There's complex checks for compliance and compliance processes, which we're all familiar with. There's long transaction chains, and there's limited operating hours, which delay payments and clearing and settlements. And there's also challenges to accessing foreign currency markets. So the release of the CPMI's Building Blocks report marks the second phase of a three-stage framework to enhance the global cross-border payment system. And on this slide, I've just called out a few points where SWIFT is already working on enhancing cross-border payments and removing frictions. So just to call out a few, in focus area A, the SWIFT GPI service publishes a GPI quality index that measures speed, traceability, fee transparency, and making sure that remittance information is unaltered. And in focus area C, SWIFT is integrating domestic rails with the GPI network, and it's measuring speed, traceability, and faster payment service levels into the instant payment systems around the world. And in D, we're driving the global and domestic market ISO 20022 harmonisation message formats to facilitate interoperability. So moving to the SWIFT strategy. With the pandemic accelerating digital transformation, the move to real-time payments, API-based open banking, and a focus on, as you can see, cross-border payments from the G20, SWIFT have announced that over the next 2 years and beyond, it's going to fundamentally transform payments and securities processing. We will be retooling our cross-border infrastructure, and we are going to enable the world's financial institutions to deliver end-to-end instant and frictionless transactions. That's a mouthful. Look, we're expanding beyond financial messaging, and we're looking to provide comprehensive transaction management services between financial institutions and other participants, and minimise frictions, optimise speed and predictability, and really move money from one account to another anywhere in the world. Our next generation platform will use APIs and cloud-based technology and include extensive data capabilities and enable pre-validation of essential data, fraud detection, transaction tracking, and exception case management. So the 5 key trends that we see which underpin our strategy are, of course, upstream disintermediation is caused by new platforms and other services that are trying to address friction in the transaction chain. We all know that there are new trade and FX securities solutions that are entering the market, and if they're successful, they will really change the way that most SWIFT transactions are generated. Perhaps importantly, we also see direct competition. Clients' needs are changing and the tolerance for friction is really failing. So competitors are filling the gap, particularly at the front end. We all know those competitors in this space like TransferWise and Revolut are really making a big difference. Of course, compliance continues to occupy resources and executive attention, and mandatory changes are driven by regulators and MIs, including SWIFT, and the list is a really long one. And finally, new tech is rapidly is being adopted by new entrants. So to realise our vision, we'll transform our platform, and we'll do so in a way that really shields our customers from changes and helps them adopt new technologies and services at their own pace. Okay, so just a little bit about the payments focus. The transaction management strategy moves beyond the message-centric model. That's really been the foundation of Swift services, and it's putting business transactions at the centre. We are really maintaining what we call a golden copy of all transactional messages in the system, and we're going to orchestrate the interactions of all banks and other participants in that transaction chain. So the payments focus of the platform is expected to obviously enhance the customer experience, make transactions easier, enable instant and remove friction, and innovate and future-proof. So let's talk a little bit about interoperability and ISO 20022, our favourite acronym for 2020 and beyond. Look, the Swift strategy and the evolution of the platform gives us the opportunity to do ISO 20022 better. The transaction management concept allows us to maintain full data at the centre without relying on every bank in the chain to pass it on. This eliminates the key challenges of the previous plan and allows banks to move to ISO 20022 in their own time. 20022 is a major transformation project for most organisations, most banks, most corporates, and Swift is helping to support that with the new platform. What's really important about the adoption of ISO 20022 is that it will enable a new wave of innovation. It's based on high quality of richer data throughout the process. It's rich data end to end, and it's really on a universal scale. ISO 20022 creates harmonised and standardised messaging. It's also the foundations for APIs, which are really the underlying foundation to drive interoperability and the development of new services offered by banks and fintechs across the world. Another opportunity to build interoperability is through APIs. So application programming interfaces are transforming the way that payments are done. We believe that the reuse of ISO 20022 business definitions in data models will make sure that we can encompass API and legacy technologies. This is a really interesting challenge, and in support of the business standardisation efforts, we've developed an API platform, and we're enabling business units to expose their own APIs. Banks and third parties can join the Swift API ecosystem while retaining their agility and also leveraging the identity verification and security that Swift can provide. Swift is also working on extending its Swift services that can be accessed via GPI, and such as financial crime compliance, reference data, and business intelligence. Swift is working on behalf of our members to deliver this ecosystem, and it's really looking to support interoperability for the future of finance. But the transition to an API economy requires sustained engagement from industry, from banks, from market infrastructures and technology providers and standards bodies to actually make it work. So that's the end of my presentation. Thank you very much, and I so apologise for the technical issues that have been experienced this morning.
No worries, Julie. We totally understand technical issues around here. As long as the payment system is resilient and keeps ticking along, that's really all we care about. When Zoom goes down, we can work around it. Obviously, ISO 20022 is a big platform messaging service for Swift. Can you tell us some more about the dates the global market infrastructures have published for adopting ISO?
Sure. Look, Australia and New Zealand are looking to go live in November 2000, oh no, I can't even say that, 2022. That's really confusing to say with ISO 20022. So 2022 for Australia and New Zealand. Singapore is actually probably going first. They're going in Q1 in 2021. And the big markets like the UK and Canada also have a 2021 and a 2022 timeline. So most markets are going, making those changes in late 2021 into 2022, and we'll have extensibility and backwards compatibility periods for the same amount of time, most likely as SWIFT, through to 2024 and 2025.
And that's for the, so in New Zealand, that's for our high value system. That's for a particular type of payments messaging, isn't it?
That's correct. So SWIFT's cross-border ISO 20022 program commences in 2022. And then all high-value clearing systems that I mentioned in those markets, or the RTGS systems, are also transitioning to ISO in those time periods. And what that's actually doing is driving that interoperability across payment systems in cross-border and domestic. And also some of the instant payment systems in different markets are also using ISO 20022. So if you think about the bigger global ecosystem of payments, we'll have cross-border on ISO, we will have high-value clearing systems and RTGS messages on ISO, and we'll have instant payment systems like NPP here in Australia, and Singapore's FAST system also using ISO, and that gives banks and corporates and market infrastructures the opportunity to link all of those payment systems together, and for us to move cross-border payments and domestic payments interoperably around the globe through those systems.
Excellent. And you just talking about cross-border payments, SWIFT recently, there's a question here, SWIFT recently announced a pilot for low-value cross-border payments, and you mentioned TransferWise and Revolut is kind of leading the way in some of the areas. Can you tell us a bit more about what you're doing in that space?
Yeah, look, SWIFT announced a new service to help banks improve the experience for their small and medium-sized SMEs and consumers who send low-value payments across borders. And it's really enabling these banks to help their customers make faster, easier and more predictable and competitively priced payments around the world. It's really building on the success of SWIFT's GPI, which is obviously used by thousands of banks and carries many payments across the cross-border service. But the new low-value cross-border service includes it's easy to use. It's going to have simple and streamlined user experience with obviously the security that SWIFT is renowned for, ingrained at every level. It's going to be faster. So there's tighter service levels between banks that have been agreed, and that will increase the speed. And we'll make sure that we use a single payment format. So we'll increase straight through processing. And we're going to use some of the existing services that we have, such as pre-validations, to make sure that we're removing friction. So if you can check an account number up front before the payment is sent, that makes sure that when the payment is sent, and it's a simple and single message, it should be able to just flow straight through without any manual intervention. We're also one of the foundations pillars is competitive pricing. So sharing predictable and competitive processing fees that are agreed bilaterally, and making sure that they can provide that information to their end customers. Of course, it's going to be secure. Payments will be exchanged through the SWIFT network, and they'll be cleared through best-in-class channels for international payments. And 2 weeks ago, the first payments went through the service, and they were exchanged by banks with a major geographical spread like Bank of China, Barclays, BNP Paribas, Bank New York Mellon, Deutsche Bank, KEB Hana Bank, MY Bank and National Australia Bank. Also a few more banks that like Wells Fargo and UniCredit. And there is also a waiting list of banks to participate and join in the pilot phase. And we expect this service to be available for all financial institutions in 2021.
Excellent, thank you. Thank you for that. That was really informative. We've run out of time a little bit and questions on our platform for you today. But thank you for working through our little glitches, and thanks for sharing so much information with us this morning. If we'll put your slides and your details up online, and I'm sure people can touch base with you if they want to know more about some of the things you've talked about this morning.
Thank you so much, and apologies again.
No worries. Thanks, Julie. Take care. Have a great day.
Thank you. Bye.
Okay, so over to me now. I think I've teased it 3 times now with talking about our payments modernisation plan for Payments New Zealand. So I think there we go. So Payments New Zealand this year have been working with our participants and our members, around 40 odd organisations, on our Payments Direction Initiative. And those of you who know us know that the Payments Direction program's been up and running for quite a few years now. It's our long-term strategic kind of outlook on the future evolution of payments and looking at how we can provide for that future in New Zealand. So if I click over here, I'll keep it. Yes, I think it's coming through. Yes, excellent. So what we've been doing this year is the last few years we've been working on specific work streams, and so like the API Centre and SBI 365 and some other work that we've done have been some of the work streams under that Payments Direction umbrella that we've been working on. This year we took a bit of a pause and we wanted to go back and to look at, cast our minds out to 2030 and look at what 2030, what that would look like, consider the characteristics of a payment system out into 2030 in 10 years' time. To do that, we circled back with our industry working group and we looked at the limitations that we currently have in our payment system and the limitations for helping us to achieve that, those future characteristics. And what we've come up with is some building blocks for the future, really, and what's going to enable us to bring about that future. And when I say us, that's collectively, individually, cooperatively, competitively. So our thoughts on this have been broad and wide-ranging, and I suppose it sets out what we could have, and a little bit like what Geoff and Julie have been talking about. It touches on many of the same things they've raised today in terms of payments evolution. So in terms of that 2030 view, so what we looked at was, and with the group and what they really helped us to do, was really to look at the future view and think about how Kiwis can pay who they want, when they want, and how they want. And one of the things that the industry working group helped us to do is really put the meat on the bones of what that means with Kiwis being able to pay who they want, when they want, and how they want. And really how that is achieved and what the industry working group helped us to do was to look at the principles that sit underneath that and why we want Kiwis to be able to do that. And so then we came up with 5 kind of key principles that underpin that. We want to help Kiwis achieve their financial goals. We want to improve financial inclusion. We want to build a more productive New Zealand. we want to improve financial resilience of Kiwis, and we want to support competition and innovation to offer more choice in payments. And so if we want to achieve all of those things, when we look out to the 2030 future view, it's characterised by these features, of which both Geoff and Julie have touched on some of them today. Our working group and us, we looked at real-time payments, the local and cross-border experiences in real time, informative and informed. So ISO 20022 as a solution obviously fits in, but we're looking at payments rich in data and information. Always on, so a system that's always available to Kiwis. We're looking at a broadening mix of industry players and an ever increasing and larger than ever ecosystem. We looked at simple authentication, customer payments experience being simple and, most importantly, trusted. Safe and secure payments, so Kiwis have the confidence and in the integrity of the system. And simple, safe ways to pay, so simple, seamless, secure. So when we looked at some of the current limitations, bit of a lack of real-time functionality there, the ability to transmit only limited information, the availability of some of our core systems made 15 hours a day by 5 days a week, and we're already looking at addressing that over the next few years in one of our clearing systems. Limited overlay service offerings, the need for these individual KYC and CDD customer identification processes. The industry working group we looked at, we've got good individual fraud detection, but limited toolkits to share, and there's plenty of system-wide opportunities. And I think Geoff Bascand this morning had a little bit of a nod to that around cyber resilience. And a limited set of standardised and open APIs in the market, which obviously also speak to those overlay services. So what we did with our working group is we also collected and they shared a lot of use cases that really helped us refine these limitations. And then finally, we looked to the building blocks for the future. We've identified 9 building blocks really that will help make and ensure the payment system remains progressive and world-class over the next 10 years. So what we have done from here, and I want, as you'll see reading this slide, all of the future view, the limitations, and then the building blocks all kind of interlink and speak to each other. So what we are wanting now is your voice in this payments modernisation plan. So what we've done is we've pulled together a discussion document. We've taken all of that industry work this year and packaged it up. And what we'll be doing over the next couple of months is coming out. We've got some virtual roadshows. We're asking for feedback, and there is a way that you can provide feedback on what we've set out in this discussion document on the payments modernisation plan. So what we would like you to do is get involved in that. So use that QR code there. You should all be used to it with your COVID tracer apps. Scan that or go onto our Payments New Zealand website, register your interest, and we can, the payments modernisation plan is close to being able to be shared, and you can register your interest, and we'll make sure that you can come along and be involved in those roadshows. And we really encourage you to send us feedback as you work through that. There's a lot more meat on the bone, so to speak, that needs to go into the plan. And obviously, once we kind of get all your feedback and pull that all together, then we actually have to think about what are the initiatives that, for instance, Payments New Zealand or our industry might look at, and what are the initiatives that are really up to the market to pick up and run with. So that's a little bit on our Payments Modernisation Plan. And as I said, I encourage you to register your interest and get a copy of that and get involved. So that brings us to the end of the session today. Thank you for being with us. Thank you to our guest speakers, and thank you to our sponsors, Swift, ACI Worldwide, the Middleware Group, and Buddle Finlay. Next week is our final session of navigating the new normal for payments, and we're going to look at Kiwi wellbeing, and we've got 3 guest speakers that are coming along to speak on that, and Steve Wiggins will be back next week to facilitate that session. So thank you for staying with us this morning. To those that are streaming it online, kia ora to you, and I'm sure you'll find this have found this very interesting today. Ka kite anō, have a great day, and we will see you next week. Bye.
Bye.